I never want to see you again, because every time you come into my dealership, you deliver bad news. And then a few years later, this came about.
I want to see you every day.
And I said, hey, Brian, I finally get to give you some good news.
This accountant has spent an entire career on investigating financial fraud cases in the automotive industry. But what he's doing now could have the biggest impact on dealership financials yet. Today, I'm speaking with Frank O'Brien, a partner at Withum, a technology-driven advisory and accounting firm that specializes in automotive. We discuss catching $800,000 stolen by a dealership controller, the accounting mistake costing dealers thousands, how to attract and retain service bay talent, and much more. Don't forget to click subscribe so you never miss an episode.
What's up, everyone? This is Car Dealership Guy. You're listening to the Car Dealership Guy podcast, which is my effort to give you access to the most unbiased and transparent insights into the car market.
Well, before we get into the show, this episode is brought to you by Cars Commerce, the platform to simplify everything about buying and selling cars, including the quote-unquote follow-up. Let me explain. Dealers, fast and effective follow-up is crucial for converting leads into customers. But here's the problem. 40% of shoppers report that they are not getting timely or helpful responses from dealerships. This is a huge problem because your own team could be leaving 4 out of every 10 sales opportunities on the table. Cars Commerce makes it simple to measure and improve your follow-up performance. A Cars.com experience report tracks the percentage of leads your team is responding to and how customers rate those responses. While Dealer Inspire's retailing technology enables your team to quickly text follow-ups with personalized financing options to make the most out of every opportunity. To learn more about how you can measure and improve your team's follow-up performance, go to carscommerce.inc/experience or click the link in the show notes below. This episode is also brought to you by CDK Global. CDK Global has been empowering nearly 15,000 dealers with the tools and technology they need to build deeper relationships with customers. Their team is keenly aware of the state of dealership technology, and while many vendors promise seamless experiences between your CRM, DMS, digital retail, and fixed ops, most of these bolt-on solutions tend to break workflows and cause more harm than good. That is why CDK has launched a new dealership experience platform. This new integrated software consists of everything you need to operate a dealership efficiently while delivering an unparalleled experience to your customers. Basically, everything working together, not separate, one system to run your dealership as opposed to 10. CDK developed it with an outside-in approach, listening to dealers every step of the way. You can learn more about CDK's dealership experience platform by visiting cdkglobal.com/DXP or clicking the link in the show notes below. Lastly, this episode is also brought to you by Withum. I'd like to thank Withum for coming on as a guest and also supporting this podcast. Frank O'Brien on the CDG podcast. Frank, welcome.
Thank you very much, Yossi. Appreciate you having me on.
It's funny to hear my actual name being called. I'm used to people are usually about to say my name, and then they're like, hey, car dealership guy. So it's funny, quite a change of pace. Well, it's good to have you on. Before we even get into the market, lots of questions from people about where's the market headed. You clearly have a really front row view here with what you do in your line of work. But I want to take a step back before that and just talk about your background, how you got started. Specifically, I saw that you had some background in automotive fraud. Automotive fraud, I did an episode with another gentleman a couple months back. It was an extremely hot episode. And I just want you to give us a little bit of background into that world, right? What was it like starting in the auto business and really specializing in fraud, and parlay that with some of your background?
Sure. So I started in public accounting, and I graduated from Villanova in 1998 and worked for a regional accounting firm called O'Connor and Drew in Braintree, Massachusetts. And the funny thing is, I still technically I never left, because O'Connor and Drew last year merged with Withum, Smith and Brown, which is the third largest automotive accounting firm in the country. So my career path has always been in automotive accounting. And I started off doing taxes and audits like your normal, typical young CPA. And I realized early on that wasn't what I really enjoyed. So I was fortunate in my first, summer after tax season that I was able to just randomly get selected to be on a fraud project. I said, hey, if you can get me on more of these projects, I like these types of projects. And I kind of started that transition.
Just give us some interesting stories. I'm sure you've seen a lot through your career, and I'm sure people are wondering, right? Like, what are some types of fraud? Just give us a little juicy story just to kick off.
So several years ago,
I see the smile. I see the smile already.
So several years ago, we get a call from who owns And he said, hey, I got a dealer in New York that needs help because they think their controller's stealing from them, and they don't want to use someone local because they already use a local guy, and they need someone from outside the area. So I drive down with Kevin Carnes, who's another partner at the time. We get up at like 5 a.m, drive to New York, get there, we pull up to the dealership, and it looks like a Dairy Queen. Like one of the old school, like 1960s Dairy Queens, right? And he turns to me, and it was funny too, because it was like March 9th. So this is right before the corporate deadline. He turns to me, he's like, I'm so sorry for wasting your time. I said, wasting my time? I go, you're the guy that has to deal with the taxes. I go, I'm just doing projects, special projects. I'm not that busy right now. So we go in, we talk to a guy by the name of, he said, how's business? Now this is 2009. This is right after the market crashed. The economy's in the tank, and we're figuring this guy's going to go out of business, right? Especially if his controller ripped him off. And they're like, it's never been better. So this is right around the time Subaru really started to take off. So he had made more money that year than he had the previous year. And I think that year he made like $500,000. And we had the account until 2017 when he finally sold. And by 2017, he was making $3 million a year. They were absolutely killing it. So he tells me the story. He said, listen, I got a call from my bank. They say I'm $2.3 million out of trust. And before I can even hang up the phone, the controller is at the door saying, you're going to get a call from the bank saying you're out of trust. And here's where you spent the money. And she provides him with a list of all the personal expenses that he's run through the business. And he goes, don't you think that's strange? And I said, yeah, but let's take a look at things. Let me get a bank rec. So I go to the controller. I say, hey, can you give me the February bank rec? And she's like, February's not done. I said, okay, that's no problem. Give me December, right? And she's like, well, I don't have December either. I said, well, what can you give me? And she said, October. I said, okay, fine. Give me October, because if cash reconciles through October, it's unlikely that she clipped them for $2 million in the last 5 months. So at least we have a starting point. So we're working away, doing a cash flow. Nothing makes sense. The books are a mess. And Kevin turns to me and he said, he's like, I got to figure out where this money got posted to his loan account. I said, well, let me get that bank rec. So then I walk up, I said, do you have that bank rec? I mean, we've been there for like 4 or 5 hours. I said, do you have that bank rec? She goes, it got lost in a flood. And I'm like, flood? I'm like, what? And I'm like, how? I'm like, we got lost in a flood. I'm like,
is there a flood that I don't know about?
Yeah, what are we doing here? So I go, what can you give me? And she goes, I can give you June. I said, well, just give me June. She gives me June. It's one piece of paper. It says balance per bank, outstanding checks, balance per GL. I said, oh boy, we got a problem. So, and
Oh, no.
we did. We launched the investigation. We uncovered that she stole about 800,000, but we stopped at a certain point just because we're just going back in time. And eventually we just got to a point where the data and the records became difficult to follow. But
you see, ladies and gentlemen, never a dull moment in the car business.
No, not at all.
You gotta love it. So Frank, clearly have had an interesting career. Fast forward to present day, what are you currently doing? We know what you're with Withum, right? But just tell us a little bit about what you're currently doing. I want to get a bit more of the nitty gritty. Again, given the fact that you have such a front row, view into these dealerships and, P&Ls and everything. So I want to get into that. But start us out with a bit more about what you're currently doing today.
Sure, absolutely. So right now, I still handle some fraud work, especially in automotive related. All my work is automotive related. We still do some fraud projects, but I would say 80% of the work we do is centered around fixed ops and specifically warranty reimbursement.
Tell me more about just the overall industry. I've talked a lot about on the podcast just about the last 3 years. Dealership earnings have been through the roof on a relative basis, or much higher than prior years. We're sort of coming back to pre-pandemic levels now. Give us a lay of the land, right? Where are we at today? What's your outlook?
Yeah, we're seeing the exact same thing. The last 3 years were record profits. Gross profits were way above what we normally see. And now the month of January was a tough month for car dealers. The SARS, I think, was like 14.8 million, which was down below what they originally projected.
So, and again, for anyone that doesn't know what that means, right? You're referring to just the seasonally adjusted annual rate, which is really how many new cars we're expecting to sell this entire year.
So now February's off to a sluggish start as well. We are seeing higher inventory levels. We're seeing the interest rates are a major factor. So the vehicles are at the actual cost to buy a new vehicle is at an all-time high. The used vehicle market follows the new vehicle market. And when consumers are faced with high interest rates, now they're getting hit on both ends, right? They're getting hit on both sides of it, so that it's a more difficult purchase for the average consumer, and it also extends the loan terms as well, and the life of the vehicle. So what we're seeing and what we're advising our clients is fixed operations really is going to be the forefront of the upcoming months, and maybe all the way through the next couple of years.
Tell me more about that, right? So first of all, your margins are declining. There's no doubt about it. You mentioned interest rates are an issue. What does that mean? Like, what is really happening? Like, let's go a level deeper on that.
So when the average person, when they buy a car, they don't pay cash for it. They finance it. So you have two aspects to the purchase. You have the vehicle that you're looking to buy. So you have whatever the cost is, less your trade, less your down payment. So it comes to a net price. And then that gets financed over the course of what used to be 5 years. Now it's 6, 7, even sometimes 8 years, in order to keep the monthly payment down. Because ultimately, most consumers are focused on what can I afford to pay for my car payment each month, as opposed to what is the actual vehicle cost and whatnot. So what that does is it ties up, expendable cash, which is obviously not strong for the industry, but the automotive, the automobile, the vehicle is a necessity for the individual. However, if you can take that vehicle and say, okay, you know what? I don't need a vehicle right now. I can just maintain and service my current vehicle. And instead of trading in it after 3 years, 4 years, 5 years, 6 years, I can extend that a couple years. Then that helps the overall just personal cost of the average consumer. So what we're seeing is it becomes a purchase of need rather a purchase of want. So that, which is ultimately going to hurt sales in the industry, but that should help the service department and the fixed operations, because in order to maintain that vehicle, you have to service it properly and you have to make the necessary repair.
Mm-hmm. Do you think the industry is equipped for a potential like secular rise in service? Obviously, like you mentioned, car prices are still through the roof on a relative basis when you combine it with interest rates. But we also know that, it remains extremely difficult to hire technicians and, to properly, to have proper labor for, to support service business. What do you think about that?
Yeah, so I think it's a challenge. There are some well-run service departments that can absolutely handle the influx of the business, but you have two issues. One, you have capacity issues. It's really the main issue, and that is your technicians in your service bays. So the problem that we've run into is that technicians, and this isn't a new problem. Technicians have been hard to find for the better part of a decade. What this is my personal opinion on the matter is there are just few. It's a supply and demand issue, right? So there are fewer individuals becoming automotive mechanics for two reasons. Number one is, I was, born in the 80s. I graduated from college in the 90s. Ever since I was in high school, there's always been a push for, 4-year higher education, right? So plus those jobs tend to have longer staying power, higher, growth potential from a revenue standpoint and whatnot. But on the flip side, there are still a lot of kids going into the trades. But from that standpoint, the trades that tend to get most attraction are the ones that are tied to unions. And there aren't a lot of mechanic shops that are tied to unions. And that's predominantly because the benefits are better. So, one of the areas that dealers have never been known for is their benefits, just in general. So it's something that dealers should look at and maybe try to get creative as to ways that they can attract more people into their business, especially technicians.
Mm-hmm. Is anyone doing anything interesting on that end? Like, have you seen any best practices that you're like, wow, if every dealer under in the country operated this way, there would be a technician surplus?
One of the areas is you can get tied into the mechanic schools. Like that's a great way to do it. Take kids out of the school. That's usually the primary one. I did have a dealer years ago. He had a pretty good benefit program. It was a Christmas fund, right? And what he did was it ran from September to August, but it got paid out on December, first payroll of December. But he had to be there to get the money. So he took a percentage of the bonuses and the commissions, everybody that was on commission and bonus, and deferred it till December. And it not only the employees loved it because they got a big check. I mean, there were sales managers got like 20, 30 grand at right around Christmas time. It was great for their savings, right? It was a forced savings on their end, but it was also really a retention policy, right? Because think about it. You're not getting your paycheck until 3 months after you finish earning it. Then you're already 3 months into it. Nobody's leaving their job right before Christmas because it's too busy, right? Now all of a sudden you're 4 months and you're a third of the way through the year. So dealers can use, and they can customize that into retirement benefit plans or get creative to figure out ways to just retain technicians, because it's not only important to hire them, but it's important to retain them, because it just no good to spend all the money training the guy and then have him move over, to somewhere else.
Labor is one of the biggest expenses, always recruiting. I mean, I'm sure because we've only blasted it like 1,000 times already, but we recently launched a free industry job board. So we kind of put it all over just all over our website and whatnot. But technicians is obviously the toughest part to support and to help. It's the job board is to track, again, cdgjobs.com, and you can see there's plenty of different roles there, over 100 roles at this point. But technicians is a big thing on my mind, right? Like, how do we make it more attractive, and how do you really invite more technicians to a platform like this, because it's obviously a huge need in the industry, and whoever can solve that will definitely be a billionaire.
Yeah.
With everything going on the service side of the business, tell me a little bit more about what your specialty is in this industry. And I know you're working on warranty reimbursements. Can you tell us a little bit about that? Explain what it is.
Every state has franchise laws. Well, we call them state statutes, but they're really state franchise laws, which provide certain rights to the car dealer. And specifically, when it comes to warranty reimbursement, these states have these laws that allow the dealer to submit for a warranty rate increase on both parts and labor, which will ultimately change their warranty rates to a higher number and yield them more profit. And it's a labor intensive process because it requires 100 repair orders with warranty like services, or what we call 100 qualifying repair orders. And in order to get that, you have to go through thousands of repair orders. And what's interesting is that first of all, the state statutes all vary rather significantly. Some are more like the others, but we have some that are very basic and generic, while we have others like state of California and the state of Alabama are very detailed. They go through they give you very specific instructions as to how to submit, but also what repairs to exclude, which is important. And also it gives certain submission instructions, response time that the OEM can only take so long to respond, and what the process is there. So but what's interesting and what I've noticed over the years is that you could take the same statute and two different manufacturers can have different interpretations.
How did this issue even arise, right? Like, where did this come out from, that with reimbursement issues with the manufacturers, right? Where was the line drawn where, people like yourself said, hey, we can fix this for the dealer community? Let's just start there.
So back in the 2000s, a couple states, starting with Jersey and then Florida and Maine, really around 2007, put these laws on the books. And what they stemmed from was, for the length of time, the relationship between the car dealer and the manufacturer was a one-sided relationship. They talk about a sales and service agreement. It's not an agreement. It's a take it or leave it. You have one choice. You either sign this, Mr. Dealer. If you want to be a dealer for whatever manufacturer, you have to sign this agreement, right? So the dealer's not agreeing to anything. It's not a negotiation. It was just, okay, and we're going to reimburse you. And they'll start off and say, okay, we're going to, at the time, say back in, the dealer gets his point back in the 90s or the 80s. We're going to pay you $80 an hour for warranty, and we're going to pay you cost plus 40 on the parts side. So fast forward to 2000, mid 2000s, 2007, the state associations, a couple of them, Florida, Maine, started in the Northeast. New York was followed suit afterwards. They rewrote the franchise laws and included a warranty reimbursement section that then basically required the manufacturer to reimburse the same rates that the dealer is charging to his retail customer. However, in order to determine what that rate is, you had to go in and substantiate what you're actually charging your retail customer. And it's a weighted average calculation, right? So if you're marking up a transmission, 40% versus you're marking up a light bulb 300%, that's going to ultimately, net out to some other, over the course of the weighted average of all the parts in that. Same thing on the labor side.
Tell me more about just the overall exposure, right? Because it seems like such a niche little thing that you don't, the average person, whether dealer or consumer, you don't really think about, but it's clearly a big thing. What's the annual exposure here, dollar exposure that you've seen, dealerships, lose out from something like this or benefit from it in the case where, they do like a reimbursement like this?
So the benefit will vary based on the volume of warranty work that you do, and also the increase that you're receiving. But it's a cumulative, perpetual stream of revenue. So we've seen, domestics that will pick up 12,000 on a labor submission on average, where imports will pick up, say, 7,500, and the luxury stores will pick up, say 15,000. But we just did a BMW store that was picking up $85,000 a month in parts and labor. On the flip side, we also did a Honda store that only picked up $1,600 a month, but they do it twice a year, because Florida, you're allowed to actually do it twice a year. Most states are only allowed to do it once a year, but they're allowed to do it twice a year, and they do it twice a year. So they're clockwork. Every 6 months, they're ready to do it, and they'll pick up, $1,500, $2,000, $3,000 a month every time. But that adds up, that accumulates over the course of time. The next time that you're submitting, you're working from the higher rates. You never lose out. It's at a perpetual stream of revenue, but it can be a significant amount. We did one dealership in California that picked, it was $180,000 a month, parts and labor. This is when the California law first got passed. They absolutely, Chrysler, Jeep, Dodge, Ram, I believe.
That's incredible. It's sitting under someone's nose. If there's an entrepreneur listening to this, or, a dealer maybe, are there other opportunities that exist like this in the car business that come to mind?
No, nothing of this magnitude, of this scale. But what's happened in what we've helped with dealers over the years is really trying to maximize the profitability in fixed ops. So they basically go hand in hand. I was told a long time ago, when I was first starting out in this business, was that the dealers are only motivated by two things: fear and greed, right? So, and I remember early on, I was doing a lot of fraud. I was doing a lot of compliance stuff. Like, I was even getting involved in like safeguards rule and red flags and all that, F&I compliance. And I had a dealer, Brian Kelly, one time say, "Frank, I never want to see you again, because every time you come into my dealership, you deliver bad news." And then a few years later, this came about.
I want to see you every day.
And I said, "Hey, Brian, I finally get to give you some good news." right? So, but what we've done is we've really changed the way we look at our standard fixed ops reviews, and yeah, we'll look at processes and procedures and whatnot, but we're also looking at profitability, trying to help dealers with their profitability, because there are ways that a dealer can be more profitable. And then ultimately it helps them on the back end with this warranty reimbursement, because they can get higher rates from the manufacturers when they submit.
Mhm. Well, I think what's most interesting to me is, typically when you hear help dealerships with profitability, you'd think, kind of knee jerk reaction is it comes at the expense of the consumer. But I think it's interesting here that it actually benefits the consumer. With this specific example, like you mentioned earlier, right? Well, if I'm being reimbursed, a full market rate for a job for a consumer, I'm going to be more incentivized to do that job. So it's unbelievable how something so small can have such a big, kind of downstream impact on your customers and ultimately the perception of your brand. Just where do you see trends for dealership profitability from here? Where do we go from here?
So the labor rates are at an all-time high. We've seen that, but one of the areas is, like, number one, the service department has to be competitive on the maintenance side, right? The oil change, the services, the tires, the alignments, those all have to be priced competitively. Where the profitability and where there's an opportunity is in the mechanical repair. It's the mechanical repair, because it's a specialized service that you're providing for the customer. It's just like anything else, no matter what what line of work you do. If the way I look at it is very simple, right? I'm paying for something for two reasons. Either one, I can't do it myself, or number two, I don't want to do it myself. So that's something that plays into the car business. The average person can't fix their own car. The cars are becoming much more sophisticated. So the value of a certified technician from the franchise car dealer has a benefit over the independent. So, but you have to be competitive on the maintenance items to be competitive with the independent. One area, though, that we definitely see an opportunity for dealers to be more profitable is on putting in labor grids. So,
What does that mean? Yeah, what does that mean?
so what a labor grid is that you have your standard door rate, right? So say your door rate's $150 an hour, right? Then as the hours increase, typically the sophistication of the job increases. So as the hours increase, the actual rate increases. So if it goes up an hour, it might go up at like $1.50, and then 2 hours, $3, and then 3 hours, $4, and it goes up, and it actually usually peaks around like 6 hours. That's what we've determined. That's what we've seen as like kind of the sweet spot, because when it gets up to 10 plus hours, you don't want to be up over $200 an hour, because then you might price yourself out of the repair. You can't. So, and you're going to make a lot of money. So it's almost like a bell curve. It goes up, and then it hits like, that, depending on the imports, it's usually like 4 to 6 hours. On the domestics, it's more in luxury, it's more like 6 to 8 hours is the peak there.
Mhm. Is this a thing now? Would you say this is like pretty common, or is this
Yeah, it's fairly common. We have several dealers that do that. Some don't, but we typically recommend that dealers do it. We have a couple that it's funny. We'll go out there and they'll ask them, you say, "Are you on a labor grid?" And they're like, "Oh yeah." And then you look at it, it's like each increment goes up like 30 cents. So I'm like, well, we could probably get a little more aggressive on that grid, guys.
That's interesting. But I think the interesting part in the industry right now is that if you look at the data, I think Cox Auto put out some data through their X Time platform, and there are pockets of the country where dealers are losing some market share to the independent repair shops. Do you think these trends are overall threatening the dealership service business? Is there going to be, a reversion similar to how there's been a reversion in pricing, or it's at least starting? What do you think about that? Where do we head from here?
I think it's a market by market scenario, because in service managers and general managers and dealers, they have to know their market. So when dealers are doing a market rate survey, they need to understand what the independents are charging. And whether or not you're in an independent market. Like there's some areas of the country, and there are just some areas in general. Like you might be in the Northeast, but you're in an area that has a strong independent, a group of strong independents that can bite into your overall share. So the key thing for the dealer though is to, number one, first and foremost, take care of the customer. The customer comes first. The best thing a service department can do is take care of the customer. Understand what the customer wants, communicate with the customer. If you're doing a really maximizing your quick lane, right? If your quick lane services cannot take 2-3 hours. If a customer is looking for an oil change, they're looking to get in and out in 30 minutes, right? They're not looking to get to spend half a day there. I had a colleague of mine was telling me a story. He went in for an oil change and state inspection. It took him, and he had an appointment, and it took 2.5 hours. And he goes, that was 5 years ago. I've never been back to that dealer. And it's true, because people value time in a lot of cases more than money, because that time is a precious commodity. Money you can gain back, time you can't get back. So time is a very precious commodity. If you're doing a big repair for someone, do they need a loaner? Where do they need to get to? What's their plan for the day? And these are all basic questions that an appointment coordinator or a service advisor can ask upfront before the customer even walks in the door. So a lot of it is communication, understanding your customers, understanding what they want. And everybody's different. So I can't say there's a one size fits all.
It's funny you mentioned this now, because the podcast that's actually airing after this one is with Brian Benstock, who's the
that's great.
Yeah, he's the the GM and president or VP at Paragon Honda Acura. And the biggest thing that I think about when I think about his operation is the pickup and delivery for service. And so you're speaking about valuing time. I'm over here nodding, and it's going to be a really good conversation. So
honestly, it's going to be a great conversation. I've heard him speak multiple times. The first time I heard him was at the AICPA Auto Dealers Conference, and I literally went back to all my clients and said, "You need to do this. This is the greatest idea I've heard in the last 10 years. It is absolutely amazing." And he executed it. And don't get me wrong, it's not easy, right? Technicians there's a shortage in technicians. So he runs, multiple shifts, and he outsources the delivery service, which is good. But think about it, right? You're an executive in Manhattan. I mean, your car gets picked up in the middle of the night and it's done in the morning. And what's wild is, and I don't want to steal his thunder, but he says his labor per hour increased.
Oh, if I had that service available where I live, I would absolutely pay. I would just, want to pay like a fixed fee per delivery. Like I would be more than, per mile or however you want to charge it, but that's like a value add and a half. I mean, for sure.
I'm 100%. I'm the same way.
Zooming out a bit and just thinking about the broader industry and, the role you play in our industry, where our industry's headed. Do you see any major threats, any legislation on the horizon, anything that concerns you?
I don't know about legislation. I definitely think that what the whole industry is talking about is electric vehicles. I am a skeptic of electric vehicles, not in the functionality of them, but more so in just the mandates that the government has put on 2030, 2035, and having an all electric fleet, because the American consumer has not shown that it's ready for an all electric fleet. We don't really have the infrastructure for an all electric fleet, although that could certainly change. But most importantly, and this is the area that I don't think is talked about enough, is the electric grid can't handle it. And not that I'm a master scientist, but we don't have an unlimited amount of electricity out there. And the state of California has rolling blackouts constantly. So it would basically take one problem and replace it with another problem. So I think you look at Toyota. They've taken the wait and see approach, which is the right approach. They've really kind of doubled down on their hybrids, the plug-in hybrids, which makes a lot of sense. And I think there are alternatives that could potentially impact the industry, so that these mandates, I think, ultimately will be either lifted or postponed.
Mm-hmm. So as we're heading in here, I mean, we're 2 months now into 2024. What's your just general sentiment outlook for the rest of the year?
I think it's going to be a tough year, all total, but I think dealers will still be profitable. It's interesting because we're all a byproduct of the recent past, right? We all focus on, okay, the last 3 years were record profits. So if we come down and have 50% profit, well, that's still a good year. But by any standards, if you go pre-COVID and you were making $2 million, and now you're making 5 million, and you come in post-COVID and now you're making 2.5, you'd say, oh yeah, that's a good year. So I still think dealers, they'll adapt. They're with some of the most resourceful people we've ever known. They really know how to persevere. So I definitely think, and also too, January, February, I live in the Northeast, so they're typically slow months because of the weather. You're coming off Christmas. There's a bit of a lag, but the economy's getting a little tight. So there's definitely, I do think dealers will adapt and still be profitable, but they won't nearly be as profitable as they were in the last 3 years.
Humans have a very short memory, my friend. As my dad used to say, though, you get used to the good life very quickly. So it's funny. You're right. People do get used to, increased earnings, lifestyles adapt, and then you get slapped in the face when things revert. And so and it's not just businesses, it's not just dealers, it's people, it's the everyday consumer. So, and I appreciate your candor, because you're right. It is some not so positive trends throughout the overall industry, but yeah, it's gotta roll through it. So, Frank O'Brien, this has been great. You definitely taught me some stuff I didn't know today. So really enjoyed it. Appreciate you coming on.
Thanks for having me. I actually had a great time.
All right. Hope you enjoyed that episode. Please give the podcast a rating, consider subscribing to the show, and check the show notes for links to what we talked about. Thanks for tuning in. I'll see you guys next time.